Joining me now is Muhammed Wagley from Sasfin Wealth to give us his take on the market's activity. Muhammad, thanks so much for your time this afternoon. So the relief rally taking a breather today, European markets in the red, US futures also in negative territory. We are seeing the JSE, struggling to take direction with most of the indexes there flat. Talk to me about what's moving markets today. Are we seeing the excitement around the cut on Chinese tariffs fizzling out?
Hi, Ntaling. First of all, always a pleasure to be on. And yeah, to answer your question, I think there's a couple of things at play. I think it's worth noting that we're actually really close to that all-time high on the JSE. And then in addition to that, I think ordinarily the VAT or lack of a VAT increase would have led to a bit more optimism. But then when you sort of consider the lack of certainty regarding the tariffs and I think global markets in general, it makes sense that we haven't actually seen a hugely positive move on the back of that. I think that's really what we're waiting on. You mentioned it earlier in the show, but we had quite a bit of positivity after the Secretary of Treasury, Mr. Scott Bessent, came out and mentioned that they were considering, let's say, cutting some of those tariffs with the Chinese. And then the Chinese came out and pretty much flat out sort of refuted that, and I think that also put a little bit of a dampener there. So I think those factors at play are leading to a bit of a mixed day. I think when I woke up in the morning and saw the lack of a VAT hike, I would have expected to see a little bit more, but I think it's those other things playing on in the background.
Even looking at the rand, I thought I would see more strength on the rand front, but I guess a stronger dollar also just weighing on the rand's performance. Let's take a look at some company news on the global front as earnings season also picks up there. Gucci owner carrying out with numbers, sales taking a knock in the first quarter. LVMH about a week ago also out with numbers. They also took a hit to revenue. I think Hermes was the only counter that beat expectations. Just talk to me about your sentiments on the luxury market and its ability to recover in this kind of environment, and also its ability to pass on those prices to US consumers, considering this tariff environment as well.
Well, I think just to your point, even though Hermes may have been the only one that beat, I don't think it was sort of as well as they usually do. The company has a phenomenal track record there. And, we're definitely seeing quite a bit of softness here. But, given the broader sort of economic malaise that we're seeing, it does make sense. But, one has to consider that these guys don't really, cater to the majority. If you're buying a Birkin bag, that's costing you tens or close to hundreds of thousands of dollars, so they have a bit of a sticky demand there, but given the slight the relatively robust consumer weakness that we're seeing, it does compute that they're losing out a little bit. And then another thing to factor in is the Chinese weakness over there, and until we see sort of that growth vector recovering, which is not inconceivable, I think we won't have sort of quarters as well as good as the ones we've seen in the past. But ultimately the long-term case is still there. There's always going to be a case for luxury. People are not going to stop buying those Birkin bags or the speedy Louis Vuitton ones. It's still going to be aspirational, and as long as that is the case, there'll be a case for these types of companies.
I really wish I could buy a Birkin bag, but let's leave that conversation and move over to some local company news. Muhammad, the Anglo Stable releasing production reports. We are seeing output down on all fronts, from the parent company Anglo American to Kumba to even Amplats, but what I do see is all firms keeping to their guidance targets. What have you made of those reports?
Yeah, interesting one, and very much recurring themes throughout the sort of suite there in terms of missing production output in the first quarter, but not revising their full year production. So they're expecting quite a lot, from the second half of the year. And I think, just with reference to Anglos, myself, and you mentioned it earlier, I think most analysts were looking at that copper number. That fell over 15%. They've attributed that to quite a bit of weakness at their Chilean operation. But then interestingly, they've also noted that they're looking to sort of develop 2 additional mines, the copper mines there before the end of the year. So that was somewhat encouraging. And then interestingly, I think we saw a bit better performance from the iron ore segment than I may have expected, and that's somewhat offset it. If you look at sort of the share price over the day, it's not given sort of the negative news here. We haven't seen too much movement. I think last time I checked, it was down just over 1%, which I think all things considered wasn't too bad. And then we got a bit of clarity as to material changes going forward. They're hoping that the Amplat demerger will be effective from, I think, the end of June. And I think at that point, they'll be called Valterra, which I think does have quite a nice ring to it. And then they're making progress at selling De Beers, which I think is going to be a much longer running story. So I think we can expect that to continue for quite a bit of time. But I think everything else, it does sound like they're making progress. But, ultimately, at least with reference to the PGM, so Amplat and also Kumba Iron Ore, these guys are price takers and they've been suffering, with relatively weak markets. Transnet hasn't helped them, but we've seen some, I guess, improvements in that respect. I think Kumba made specific reference to that. So things haven't been great, but it looks like within those constraints, they've done relatively well. And there is a little bit of optimism going forward, but I still think, there's quite a lot to be done, across the stable here. So be interesting to see how these play out.
So I guess those numbers quite encouraging in this kind of environment. Muhammad, let's hit pause on the conversation before we get to your stock pick. Let's reflect on some counters that have found favor with your industry peers.
It's an interesting company. It's fallen by more than 50% since the trade war, so for the year. But it's got a long track record of doing a great job, of executing well, of being very trend aware in their fashion, and successful. They've pitched at a good price point. They're kind of in the Zara type of price range. So I think they've got a good niche. They've got a very strong brand awareness. They're growing well in SA. Out of interest, they did make a note to say that South Africa was their fastest growing region. I like the company. I think the entry point is really attractive. So it's been hit hard on the view that the majority of their production comes out of China. So there is that exposure. But these guys, and I speak for all of these companies, they have a way. The supply chains will diffuse to the rest of the world very quickly. They'll be in Vietnam or Mexico or wherever they need to be in a year from now. Most of this tariff issue will be resolved, or tariffs will be lower than what's currently being announced. And these kind of businesses will give you a real upside trajectory, some nice cyclical upside in terms of returns. So you're getting it at a really good entry point. It's a good business with a good brand, strong balance sheet, no debt. So I think it's an exciting opportunity if you fancy a bit of excitement in your portfolio.
91 has got, I think, 130 billion pounds of AUM, translates to about 3 trillion rand. That's a proper business, and it's been quite steady. They obviously lost some mandates when people obviously went to cash and others. But although we've been in a really difficult market, if you look, the FTSE is up. Most of the US indices are still up on a one-year view. So for me, you're buying, I think, a really well-run business that's very, very geared to markets. You're getting call it an 8% dividend yield for your troubles. A little bit of movement in the equity market, if they were to achieve a couple of mandates, then suddenly this thing becomes, gives you really decent earnings growth. So for me, you're being compensated with a really attractive dividend yield. And of course, most of those assets actually sit outside of South Africa. Yeah. So it's a kind of a roundabout range play as well. So I think the bottom line is I like the geared market plays right now. They give you optionality, and you're being compensated even if the earnings don't grow over the next year. I think you're getting better than you're doing on cash.
All right, so Graham going with 91 and Grant with Steve Madden. Something I actually can afford, Muhammad. We don't have much time before we get to your stock pick, so you can comment on one of those counters.
Well, let's go with 91 then. I think Graham really hit the nail on the head there. He likes geared market play, sounds relatively safe. If we see a bull run, these guys will fly. If we don't get that, then you've got that 8% dividend to fall back on. I think this one makes a lot of sense. Although Steve Madden does sound interesting as well. Let's stick with that 91. I think that one was really good.
All right, so what is your stock pick? Where are you seeing opportunity today?
Yeah, so look, in these types of markets, I think it makes sense to skew towards quality, big blue chip type companies. From that perspective, I think Amazon looks really good. A little bit earlier this week, we got news coming out the US that the Trump administration is actively working on a deal with India that's going to allow sort of Amazon and Walmart and some of the big e-commerce players there access to the Indian market, which, if I'm not mistaken, is valued at over $125 billion. So that market is more or less untapped by the foreign e-commerce giants, and that's mainly due to regulation. And if we get sort of a laxing of regulation there, that could represent quite a huge growth vector. So from also the perspective of the Americans moving a little bit further away from the Chinese, this does make sense. Amazon has lost about 18% year to date, at $180 per share for one of the best companies in the world. I still think there's some good value there. So Amazon.
Amazon, one to look out for. Muhammad, we have to leave it there. Thanks so much for your time and just taking us through trade at midday. That was Muhammed Wagley from Sasfin Wealth.